Hello, friends. Welcome to KT Research Guidance Bureau. Myself, Dr. Kumudini R. Thakur, would like to say few words for the Bureau. Thank you. દેખાતું તો છે આમાં. ફૂલ કરી ફૂલ જ છે. Hello friends, welcome to Credit Research Guidance Bureau. Myself, Dr. Kumudini R. Thakur, would like to say few words for the Bureau. This Bureau is very helpful to research students, postgraduate students, graduate students, and those who are interested to clear NET, SLAT, or any other competitive exams. So my humble request to you, please subscribe the Bureau, give your comments and favor for the Bureau. In previous session, I gave you the theoretical idea as well as short sums of ratio analysis. I explained you all formulas and how to use these formulas. This session will give you the idea about basic questions of ratio analysis. This session is specially for multiple choice questions. And in next session, also I will give you multiple choice questions of ratio analysis. So let's try to understand ratio analysis with the help of multiple choice questions. First question is ratio analysis is fill in the blank method of gaining insights into a company's liquidity, operational efficiency, and profitability. You know the simple meaning of insight. You know the meaning of liquidity, operational efficiency, as well as profitability. Four options are there. First is qualitative, second is quantitative, third option is A and B both, and fourth one is none of the above. Now, let's try to understand all these options and try to find out the real answer or the correct answer. First is qualitative. Obviously, books of accounts are not based on quality of management, quality of person, quality of labor, or anything. B option is quantitative. We know that our books of accounts we always prepare on quantitative base. We can count. C1 is A and B both, and obviously both are not correct, and D is none of the above. So you can understand all these alternatives, and the right answer is quantitative. So obviously these ratios are very useful or gives the insights of companies liquidity position, operational efficiency, and profitability. I hope you followed it. So let's try to understand another thing. Second one is ratio analysis is very useful for A, forecasting and planning. B. Budgeting. C. Measurement of operational efficiency. And D is all about. When I gave you the theoretical idea about ratio analysis, that time I explained you the benefits or the usefulness of ratio analysis. So it is very useful for forecasting and planning. If you want to forecast your sales, profit, or anything, ratio is very, very useful. If you want to prepare a budget, suppose cash budget, ratio is very useful. If you want to measure operational efficiency, that also ratio is very useful. So obviously the right answer is all above because it is very useful for forecasting and planning, budgeting, measurement of operational efficiency and all above. So the right answer is D, all above. Very clear in your mind. Third one is ratios are based on A. Future information, B. Historical information, C. A and B both, and D. None of the above. Now refresh your memory. Ratios are always based on historical data. No doubt, with the help of historical data, we can design our future. So, they are not based on future information. Obviously, they are based on historical information. So, correct answer is B, historical information. Let's move to another question. Fourth one is tools for financial measurement includes horizontal analysis, B, vertical analysis, C, ratio analysis, and D, all above. Let's try to understand the question. You know, tools and techniques of financial statement analysis. You prepare your financial reports horizontally as well as vertically. And you computed ratios for financial strength or to measure or to check any of the thing. So your right answer is all above because this tool is for horizontal analysis, for vertical analysis, for ratio analysis, and so many things. So, your right answer is all above. Fifth question is ratio analysis helps in comparison of C. Which sort of comparison? A option is two or more firms. B. Two or more years position of same firm. C. Two or more years position of firm and industry. And D option is all above. Let's understand ABCD. First, two or more firms means A and B. You can compare gross profit ratio of company A and company B. So it is very helpful for them. Second is 2 or more years position of same firm means position of year 19, 20, 21 of a company. For that, it is helpful. Third option, 2 or more years position of firm and industry. See, when you will join your research work, that time you can compare all these companies with industry. Our total economy is divided into 23 to 26 industry. And suppose your firm is in chemical industry, then chemical industries ratios are available. You can compare your firm ratios with industry ratio and can check whether they are in the same line or they are little bit poor of that one. So your right answer is D, all above, because they are helpful to compare firm, two firms, firm and industry. So the correct answer is D, all above. Next one is stock is considered as a liquid asset, current asset, both A and B, and D, none of above. It is easy to reply. Why? Because you already computed current ratio. And stock means unsold goods. So obviously you are unable to sell the goods. That's why it is considered as stock. So obviously your answer is B, current asset. I hope you can understand it very easily. Next question is, which of the following is not included in liquid assets? You know the meaning of liquid assets. So there are four assets. One, A, debtors, B, stock, C, cash at bank, and D, cash in hand. Obviously, if it is in a bank or hand, it is liquid. Debtors, you can collect money from them. But stock, as I explained you, it is unsold goods. You are unable to sell. So you may not be able to convert easily into cash. That's why your right answer is B, stock. We can't consider stock as a liquid asset. Let's move towards another question. Liquid assets is determined by A, current assets minus stock minus prepaid expenses. B, current assets plus stock plus prepaid expenses. C, current assets plus prepaid expenses. And fourth one is none of the above. You learn current ratio and quick ratio. Moreover, you know the characteristics of all these assets. Current assets, you find out. Stock is not a liquid asset. So obviously you have to deduct it. And prepaid expenses means you already paid it. So your answer is A. Current assets minus stock minus prepaid expenses. Hope you can follow it very nicely. Let's move to another question. Liquidity ratios are expressed in rupees, percentage, pure ratio form, and D1 is all above. See, try to follow all alternatives in a simple meaning. Rupees means you suppose stock that you explain in rupees, debtors in rupees, creditors in rupees. B option is percentage, means how many percentage, 80%, 20%, or 100%. C option is pure ratio form. So, what do you mean by pure ratio form? A pure ratio is a simple division of one number by another. The relationship between current assets and current liability is expressed as ideal ratio for current asset is 2 is to 1. So pure ratio form is a ratio is a simple division of one number by another. And when you find out liquid ratio, your formula is liquid assets by liquid liabilities. So I hope you follow all the meaning of this alternative. So your right answer is C, pure ratio form. Next question is the most precise test of liquidity is means you want to test liquidity. For liquidity, you know how you can test it. Four options are there. One is current ratio, B is absolute liquid ratio, C is quick ratio, and D all above. Let's try to understand this option. Current ratio, you know. Quick ratio, you know. B is absolute liquid ratio. So, what do you mean by absolute liquid ratio? Absolute liquid ratio is a type of liquidity ratio that is calculated to analyze the short-term solvency of financial position of a firm. So, obviously, your answer is B, absolute liquidity ratio. I hope you followed it. Another question is general profitability ratios are based on means if you want to test the profitability of a firm, then it is based on A is investment, B is sales, C is financial expenses, and D all above. Obviously, if your investments are more, then generally your profitability is also more. If your sales are more, your profit is also more. If your financial expenses are less, then profitability is more and vice versa. So, your profitability is based on investment, sales, financial expenses also. So, the right answer for this question is all about. Another question is, which of the following are limitations of ratio analysis? This question is regarding limitations of ratio. In that one also, four options are there. A, based on historical data. B, ignores qualitative factors, ignores quantitative factors, and ignore management skill. Okay, let's try to understand all alternatives one by one. One is based on historical data. And I told you that ratios are based on historical data. Second thing is ignores qualitative factors, means skill of the manager. That ignores quantitative factors. No, it covers. And ignores management skill. Obviously, it ignores. So options are A, B, and D. B option is A, C, and D. C is A, B, and C. And D is A, B, C, and D. You can follow the question and can give right answer, and your right answer is A, B, and D. That is A, B, and D. Based on historical data, ignores qualitative factors, and D is ignores management skill. So, right answer is A, B, and D. Next question is, from the following information, find out gross profit ratio. This is about the calculation. I hope you have notebook, ball pen, calculator, and not only your physical presence but mental presence also. So try to calculate it. Sales is 2,40,000. Gross profit is 60,000. And four options are there: A, 40%, B, 50%, C, 25%, and D, 20%. So, gross profit ratio equal to gross profit by sales. Your gross profit is already given. It is 60,000. And your sales is 2,40,000. So 60,000 by 2,40,000 into 100 is equal to 25%. And in option C, it is 25%. So your right answer is C, 25%. It is easy to understand and calculate. So everyone can solve this sum very easily. Next one is, if selling price is fixed 20% above the cost, the gross profit ratio is 20%, 25%, 30%, and none of the above. See, all knows that if selling price is fixed 25% above the cost, then no need to do any calculation. Obviously, it is 20%. So, your right answer is A, 20%. Because from the day one, we say that if it is 25% above the selling price, then it is 20% your gross profit. Now, let's move to little bit complicated problem. From the following data, determine operating ratio. Operating expenses 1,20,000. Sales 18,80,000. Sales return 80,000. And cost of goods sold 13,20,000. A 50%, B 60%, C 70%, and D 80%. See, what you have to find out operating ratio. You know the formula of operating ratio. So, sales is 18,80,000 and sales return is 80,000. So, obviously, you have to deduct sales return from sales. Okay. So, operating ratio equal to cost of goods sold plus operating expenses by sales into 100. So your cost of goods sold is already given, that is 13,20,000. Operating expenses are also given and they are 1,20,000. So 13,20,000 plus 1,20,000 by sales. Net sales is equal to sales minus sales return. Your sales is 18,80,000 and sales return is 18,000. So your net sales is 18 lakhs multiplied by 100 is equal to 80%. So the right answer of this question is D, 80%. I hope you followed it. Only mug up the formulas, put the formula and put the numbers. Rest of the thing your calculator will do. So don't bother for that one. Next question is, from the following information, find out gross profit ratio. In that one, what is given? Total sales 5,20,000. Cost of goods sold 4 lakhs. Sales return 20,000. In option A 10%, B 15%, C 20%, and D none of the above. Sales is 5,20,000. Cost of goods sold 4 lakhs. And in previous example, we deducted sales return. Same way, sales is 5,20,000, sales return is 20,000. So your sales is equal to 5 lakhs. And the formula for gross profit ratio is gross profit by sales. So gross profit is equal to sales minus cost of goods sold is equal to 1 lakh. So 1 lakh by 5 lakh into 100 is equal to 20%. So your answer is C, 20%. Okay, I hope you are following everything very nicely. Let's move to another question. Find out stock turnover ratio from the following information. Operating stock 93,000. Sorry, opening stock 93,000. Closing stock 87,000. Sales 9,60,000. Gross profit ratio 25% on sales. A option tells you 5 times, B 6 times, C 7 times, and D 8 times. What you have to find out? Stock turnover ratio. You know the formula for stock turnover ratio. Stock turnover ratio is equal to cost of goods sold by average stock. So let's try to find out cost of goods sold is equal to sales minus gross profit. Sales is 9,60,000. Gross profit is 2,40,000. So cost of goods sold comes 7,20,000. Now you know formula for average stock. Average stock is equal to opening stock plus closing stock divided by 2. Your opening stock is 93,000, closing stock is 87,000 divided by 2 is equal to 90,000. So put both figures in formula. Cost of goods sold 7,20,000, and you already find out average stock, that comes 90,000. So 7,20,000 by 90,000 is equal to 8 times. So your D option gives 8 times. So right answer is also D, 8 times. Let's move to another question. Determine value of bank overdraft. What you have to find out? The value of your bank overdraft. Which information is given for that? Current ratio of a firm is 2:1. Current assets including stock are rupees 48 lakhs. Liquid ratio is 3:1, and current liabilities except bank overdraft stands for rupees 12 lakhs. A option tells you rupees 10 lakhs, B 12 lakhs, C 14 lakhs, and D none of the above. It is little bit difficult to understand, but nothing is impossible in the world. If you apply your common sense, you can understand it very easily. Okay, current ratio is 2:1. Liquid ratio is 3:1. Let's check how to find out it. You know the formula for current ratio. Current ratio equal to current assets by current liabilities. So, current ratio is 2:1, means 2 equal to current assets are given 48 lakhs. So now it is simple mathematics. So your current liabilities are 24 lakhs. You got current liabilities. So bank overdraft. What is the formula for bank overdraft? Current liabilities minus liquid liabilities. So 24 lakhs minus 12 lakhs. So your answer is 12 lakhs. Now check in which option 12 lakhs are there. It is in B. So your right answer is B, 12 lakhs. So in this question, what we did first, ratio is available. With the help of that and formula, we find out one figure, that is current liabilities. And we know bank overdraft equal to current liabilities minus liquid liabilities. So current liabilities you find out 24 lakhs and liquid liabilities are 12 lakhs. 24 lakhs minus 12 lakhs is equal to 12 lakhs. So right answer is 12 lakhs. Next question is determine the value of stock if current ratio of a firm is 2 is to 1. Current assets, including stock, are 48 lakhs. Liquid ratio is 3 is to 1. So this question is in connection with the previous one. So these three items are same. So you know one value. And current liabilities except bank overdraft is 12 lakhs. So A 10 lakhs, B 12 lakhs, C 14 lakhs and D none of the above. So if you followed the previous one, then it is easy to calculate this one, even though I will give you the complete explanation. Current ratio, you know, 24 lakhs you find out. This 12 lakhs also you found out. Now, liquid ratio is 3. So, liquid ratio is equal to liquid assets by liquid liabilities. So, your liquid assets is comes 36 lakhs and stock is equal to current assets minus liquid assets. So 48 lakhs minus 36 lakh is equal to again 12 lakhs. Check. 12 lakhs is in B. So your right answer is B, 12 lakhs. Let's move to little bit simple question. What is the question? What will be net profit ratio if sales rupees 20 lakhs, sales return 1 lakh, profit before tax 4 lakhs, and income tax rate 40%? You know, we have to pay income tax, and that rate is 40%. You know, formula for net profit. So net profit equal to net profit by sales into 100. Profit before tax is 4 lakhs. Obviously, you have to deduct tax from them and your tax rate is 40%. So 40% of 4 lakhs comes 1 lakh 60,000. So 4 lakhs minus 1 lakh 60,000. So your net profit comes 2 lakh 40,000. Sales is 20 lakhs, but sales return is 1 lakh. So 20 lakhs minus 1 lakh is equal to net sales 19 lakhs into 100 equal to 12.63 percentage. And this 12.63 percentage, it stands in C option. So your right answer is C, 12.63. Okay. Another question is determine net purchase. Stock turnover ratio 5 times. Opening stock rupees 25,000 less than the closing stock, and average stock is 1 lakh. Four options are given: A 5 lakhs, B 5 lakh 25,000, C 5 lakh 50,000, and D none of the above. Okay, you have to find out purchase. So apply your brain. In this one, directly nothing is given. So you have to find out the value. So suppose your closing stock is X. Opening stock is 25,000 less. Then opening stock is X minus 25,000. Average stock is given 1 lakh. Average stock is equal to opening plus closing by 2. So X minus 25,000 plus X by 2 equal to, that is 1 lakh 12,500. This is simple mathematics, so you can understand very easily. You find out closing stock, so it is easy to find out opening stock. Opening stock is 25,000 less than closing stock. So 1,12,500 minus 25,000 is equal to 87,500. And stock turnover ratio is 5 into X by 1 lakh. So your cost of goods sold comes 5 lakhs. And cost of goods sold is equal to opening stock plus purchase expenses minus closing stock. So 5 lakhs is equal to 87,500 plus X minus 1,12,500. So easily you can find out purchase. That is 5,25,000. So your answer is B, 5,25,000. Let's try to understand again. Closing stock, you assume it is X. So opening stock, X minus 25,000. Average stock is equal to opening plus closing by 2. So 1 lakh equal to X minus 25,000 plus X by 2 equal to closing stock, you find out 1,12,500, and opening stock is less by 25,000. So 1,12,500 minus 25,000 is equal to 87,500. This is clear. So stock turnover ratio is 5. You know the formula for stock turnover ratio: cost of goods sold by average stock. So 5 into X by 1 lakh is equal to 5 lakhs. And cost of goods sold is equal to opening stock plus purchase expenses minus closing stock. So 5 lakhs is equal to 87,500 plus purchase you have to find out. Purchase expenses are not given, and closing stock, that is 1,12,500. So your purchase is 5,25,000. So your answer is B, 5,25,000. I hope you followed it very nicely. Next question is determine liquid asset if current ratio 1.5, liquid ratio 1, closing stock rupees 1,50,000, and There is no bank overdraft and fictitious assets. Four options are there. A 1,50,000, B 2 lakhs, C 3 lakhs, and D 3,50,000. Okay, let's try to understand first of all. Current ratio 1.5. Liquid ratio is 1. So 1.5 minus 1 is equal to 0.5. That is easy to understand. So 1.5 minus 1 is equal to zero point 0.5, and zero point 0.5 is equal to 1,50,000. So how much for 1.5? 0.5 is equal to 1,50,000. Then 1.5 is equal to how much? So your answer comes 4,50,000, and 4,50,000 is your current assets. So easily you can find out liquid assets 1.5, then point, and only 1 is equal to 3 lakhs. And there is no bank overdraft. So current assets is equal to current liabilities. So 1 is equal to 3 lakhs. So your liabilities are also 3 lakhs. So your answer is C, 3 lakhs. Again, try to understand 1.5 and 1, current ratio and quick ratio. Find out the difference. 1.5 minus 1 equal to 0.5, and 0.5 is equal to 1,50,000. So 1.5 is equal to 4,50,000, that is your current assets. 1 is equal to 3 lakh, that is your current liabilities. And no bank overdraft is equal to current liabilities and current assets will be same. So 1 is equal to 3 lakhs and liabilities also 3 lakhs. So your answer is 3 lakhs. Listen me, in multiple choice questions, some questions takes very less time and some questions takes little bit more time. So as per the time schedule, please manage your times. Otherwise, you may not be able to cover entire paper. Let's move to another question. Determine gross profit if stock turnover ratio is 8 times, average stock is 90,000, cost of goods sold is 60%. A option gives rupees 4 lakh, B rupees 4 lakh 50,000, C rupees 4 lakh 80,000, and D 4 lakh 90,000. So how to solve this one? Stock turnover ratio is equal to cost of goods sold by average stock. Cost of goods sold is not given, but stock ratio is given. 8 is equal to cost of goods sold by 90,000. It is your average stock, is equal to 7 lakh 20,000. This cost of goods sold is 60%. So 40% is your gross profit and 60% is equal to 7 lakh 20,000, then 40 is equal to 4 lakh 80,000. Now your answer 4 lakh 80,000 is in C option. So your answer is C, 4 lakh 80,000. Next question. Determine operational expenses if stock turnover ratio is 8 times, average stock is 90,000, cost of goods sold 60%, and net profit after tax rate is 50%, 1,75,000. See, this question is in connection of the previous question. So at least 2-3 figures you already find out. Now gross profit you know, net profit it is given. So cost of goods sold, average stock 60%, and gross profit 4,50,000, you already find out. So, gross profit minus net profit is equal to operational expenses. 4,80,000 minus 3,50,000 is equal to 1,30,000. See, now what comes in your mind? Net profit after tax is given. For operational expenses, you have to add tax in profit. So it comes 3,50,000. So your operational expenses comes 1,30,000 and that is given in D. So your right answer is D, 1,30,000. I hope you followed it nicely. And last question of this session is determine credit sales if gross profit, that is 20% of sales, is 60,000. Credit sales to total sales 80%. Now options are A 2 lakhs, B 2,40,000, C 2,80,000, D 3 lakhs. Gross profit ratio, you know the formula. Gross profit by sales into 100. So, gross profit ratio is 20%. That is already given. Is equal to gross profit 60,000. So, you can find out sales. So, sales comes 3 lakhs. And credit sales is 80% of total sales. So 80% of 3 lakhs is equal to 2,40,000. So your credit sales comes 2,40,000 and 2,40,000 are given in option B. So your right answer is B, 2,40,000. I hope you enjoyed the session. So please subscribe the channel, give your comments and motivate the channel. Thank you very much. So nice of you. And in next session, I will give you ratio analysis in Gujarati medium, and next session for English medium will be little bit difficult to calculate. I hope you will join and motivate me. Thank you very much. So nice of you.